Hi guys, it's Michelle Williams here with A Girl, Her Burners, and Real Estate. This is my YouTube channel. If you haven't done so, please like, subscribe, and hit that notification bell to get all of my videos. And today I have a couple of notes, and you guys know me, like I have, all these different things happening like emails and phones and text messages. So if my eyes drift away, it's just because I'm watching stuff. Today we're going to talk about the market. For those of you that know, I had my Series 6 license, which is kind of like doing investments. But I found I didn't like playing with other people's money nearly as much as I like to play with mine. But I do like to help people kind of understand the market and see how it relates to them. And I get asked a lot of questions, and some of the terminology that is used in investments, hedge funds, stocks, crypto, all of those different things. People are always like, well, what does that mean? And what does that mean? So if you're watching this and you put a message in there, just tag me in it, and I'm happy to answer it if I miss something. But today what we're going to talk about is the difference between a retail investor and an institutional investor. A retail investor is you and I, just people, not rich. We're just putting money in. We're looking at stocks that maybe we like, companies that we know, versus an institution, which is like a Fidelity, where they have, 500 stocks in a hedge fund. And so that fund is built so that they're taking some high risk, some low risk. You can get just a fund that has moderate risk, a fund that has low risk. A lot of people who are doing low risk are, getting to be my age, where they're trying to take less risk with their investments. When you're younger, maybe you're in some more of the high risk because you have a lot of time before retirement. So you can let the market just kind of sit. So if it's a downturn, you're not really worried about it. You might have 20 or 30 years before you're going to start pulling this money. And at the end, I'm going to wrap this whole thing up as to how this relates to real estate. So currently, if you have investments, the market is red. My portfolio is red. I have 4 portfolios, and every one of them is red. Red, it's just bleeding. You'll hear the terminology of falling knife. Like, you can't catch a falling knife, or you'll, probably catch the blade and get hurt. So when they say these stocks are a falling knife, it literally just means that you can't stop it. You can't catch it right now. But red, while you hate to see your portfolio decrease in value, it is not the time. And this is my personal opinion, so I'm not going to tell you to buy, hold, or sell anything, but I will tell you what I am doing. And I do not believe it is the time to sell just because your portfolio is down. I'm down 68% today. So let's just say I had $30,000 and today I have $10,000. And that's just in one portfolio. However, if you sell when you're down like this, you have locked in the loss. You take your $10,000 and you run, and you're like, wow, I only lost $20,000. But you lost $20,000. The stock market has always recovered. It has always recovered from the very beginning of time. So people in 07, 08, I was one of them. Hi, I'm old. We lost a lot of money, but the only way you lose money is if you cash out. Leave that money sitting in there, and it will rebound. It was funny because in 08, I had some airline stock, and I think at the time maybe I was paying $5 or $7 a share. And then during 08, when there really wasn't any travel, we were in this big recession. My stocks went down to like $1. At one point, it got to like 12 cents. So it looks like this huge loss. But today, those stocks are making money. And even if it's in the red, overall, I'm still making money because I had time on my side. So when is the best time to start investing? Is when you're young. The younger you are, the better you are, because it will continue to increase. So when I talk about retail investors, I'm literally talking about you and I, whether you are using the Webull app or whether you are using a Fidelity for doing like a Roth IRA. So there's some different options. And one of the funny things that I keep talking about is like, don't sell. Just kind of hang out, hold in there, just hold on. It will be okay. We are going to go into a recession. I already believe, this is again my personal opinion, that we are already 6 months into the recession. What people don't understand is the GDP, which is the gross domestic product. Every month that report comes out, but every 3 months they send out the big report. It says, how did we do last quarter? So a recession is terminology. How you reflect that is 6 months or 2 quarters of a lower GDP. So we're not selling as much of our gross domestic product. And so we have already had 1 quarter where the GDP came in lower. And I have a feeling we're going to really, I think, be teetering on a line. So if it does come in, and that report comes out in July, so if that report comes out in July that says we've had another decline in GDP, it will be official that we will have be in a recession. And I already think that we're 6 months into a recession. So how does all of this, relate to real estate? So hold on tight. So we're going to start talking about some of the terminology you guys always ask me. Everybody's like, well, how do you know what is a bull market or a bear market? I want you to think about the animal. So a bear market, don't laugh at me guys, or maybe just laugh a little, claws, roar, they're clawing down. So they're pulling the market down. Versus a bull market, they use their horns and, the trajectory is up. Like they come in low with their horns, or as I would say about my son who was a hockey player, he used to like get low and then get underneath people and toss them. So a bull market is good. A bear market is bad. And we are clearly in a bear market. Clearly in a bear market. I also have crypto, so I have a nice crypto wallet. And sorry, I'm watching my computer over here. My crypto is really down. I think my crypto is probably 75% down. And again, all that is saying is what they call it is a crypto winter, which means it's like, it's just bone chilling cold, like everything is doing poorly. And unfortunately right now, what we're seeing is a wealth transfer. So only the people that are, buying right now are probably going to make money through this. And I continue every day, I try to put in, $25 or $50, whatever I have that day, I'm going to buy something. I might be buying like Diana Shipping, which is a European shipping company, and they do large cargo containers. Or I buy GM, or I buy Tesla, and I'm buying fractional shares. So I can do that on the Webull app during trading time. So if I find I like Heinz, believe it or not, Heinz ketchup. It's just an old company. And so I can still afford to get into that, or I can afford to get into GM. I have a little bit of Ford. It's not my favorite company. I worked for Ford, probably why it's not my favorite company. But anyways, you can buy some stocks, you can buy some crypto. There's lots of different things that you can do. I will link my Webull link in the bottom of this video. Right now, if you sign up for Webull and you put in $1, so you deposit $1, it actually gives you like 11 free stocks. And so you just keep claiming those stocks. So no matter what happens at this point, maybe you're going to make $34 or maybe you'll make $56. But there's like, it's a whole random chance. It's, it's almost like gambling, but this is with free money. It's going to be your dollar. But you can get up to like $20,000 if you are the lucky one that gets like some really great stocks. If not, you still get $50 or $60 worth of free stock, and just let it sit there. Even if you don't do anything with it, even if you don't think investing is for you right now, let it sit there. Who knows? In a couple of years, maybe you'll have $500. So I've done the bulls, I did the bears. We talked about GDP, don't forget gross domestic product. And we talked about retail and institutional investors are going to be, your JP Morgan Chase. It's going to be your Warren Buffett's. It's going to be these companies, ARK with Kathy Woods. So you're going to have some of these other companies that they buy in large quantities. And so those are your institutional, and they really can direct the market. Like if they dump a whole bunch of stock, you're going to see that stock really drop. If they buy a whole bunch, you might see that stock increase. I do what is called DCAing, so dollar cost averaging, which means I just buy the same or sometimes alternating stocks, and I'm getting them at all different price points. So maybe yesterday I bought GM at $32 a share, and today it was lower and I bought a share at $29. And so I have a book, it's behind me, you can see it on that shelf, it's blue. And I literally track everything I buy, how much I paid, how many shares I bought, what was my at price, so how much was that share, and then I average them out so I know what my DCA is. And so at some point, if I want to sell, I'll know if I'm making money or losing money. And some of the apps do it for you, but I'm a paper and pen girl. I like to be able to, I buy on my cell phone when I'm waiting for an appointment, and then when I get home, I can put it in my book. I don't really want to go to the computer. I've looked at these screens all day. So, and how does this relate to real estate? So right now the market is really low. It's really red. The Fed, which we have another Fed chairman date, the 14th and the 15th this month. And then I think in July, it's going to be the 15th and 16th. So every month there is 2 days where the Fed, which manages the money, and they're trying to get a take on to inflation, to try and lower inflation. So every month they tell us a little bit about what's happening in the market, what their plan is to get inflation under control. And so we have had rate increases for the last, I think we're at month 3, month 4 now. So I helped somebody buy a house in November. Their interest rate was 3.25%. Right now, interest rates are 5.37%, which is really, really high. And so what does that mean for real estate? Let's say you were approved at 3.25% for $300,000. Now at 5.37, and don't quote me on the numbers because I'm not a finance person. And I have some finance people that will probably tell me I'm either way high or way low. But at 5.37, maybe you're only going to be approved for $240,000 versus $300,000. So your buying power is much lower. Well, we are going to have Fed meetings starting on Wednesday, the 14th, and I imagine that we're going to have a new rate increase. Let's say it's going to be 50 basis points, which is like 0.5%. So for 5.37, maybe by Thursday, we're going to see 5.87. If the Fed gets really hawkish, which is another term we're going to talk about in a minute, maybe they're going to go 0.75, which is 75 basis points. And if they do that, then we're going to be in this, really, we'll probably hit 6% for mortgages for a 30-year fixed. And so while your buying power is going down, housing prices are coming down slightly. Everybody says, well, I'm going to wait and see what the housing prices are going to do so I can get a better deal. listen, you either can buy a house or you can get a deal. You're not going to get both. You're either going to pay a high interest rate, or you're going to get a really inexpensive house and you're going to get a deal on the house, but you're going to pay more for the rate. So if you have to finance, it doesn't really matter when you do it. It's just a matter that you should do it. And the reason I say that no matter what, you should be buying a house is because rents are going up. I just had somebody come in to buy because their rent went up $500 for their one bedroom apartment. So they went from $1,800 to $2,300. And there's no equity in that. Like, you're not getting anything. In November, I helped somebody buy a house and they were like, how am I going to afford $1,500 a month? And today they're like, oh my gosh, I'm so glad I bought, because that $1,500 a month mortgage would be $1,800 or $1,900 a month now. So their mortgage is going to stay at that $1,500 a month, say, in 5 years, when somebody is going to get that same house. Let's say they spent that same $280. They are not going to get the same type of house. They're not going to get as much house because now they're having a high interest rate. If all of this sounds really technical to you, just let me know, and I'm happy to have a conversation with you. Sorry, my phone's ringing. The other thing we're going to talk about is, when we talk about these rate increases, it really does make a difference as far as how much you can afford, your debt to income ratio. And literally, we just have somebody that was trying to buy a house and is still buying a house, but because the interest rate went up, they had too much debt. So they had to pay off some debt to be able to stay at that price. And so all of that has to do with, what's happening with the Fed, what's happening with inflation, the consumer price index, which is CPI. And so when we talk about the Fed, if they're hawkish, again, I don't know what has to do with, anything in the financial market, that they have to have weird terminology. But if the Fed is talking hawkish, that means they're more aggressive. They're like a hawk. They're going to go swoop in and pick up a rabbit from the field. If they're dovish, they're going to fly off at a wedding, and it's just a beautiful sign. Honestly, I don't understand why we have to have these weird analogies, but we do. So I'll put something in there, like a little definition of what all this crazy talk is. So we're going to be watching tomorrow for the Fed to tell us if they're going to be hawkish or dovish, and it's all about how they're talking. And if they're aggressive, we're saying they're hawkish. And if they're saying, nope, we're just going to do 50 basis points, at this point, if we do 50 basis point, which is 0.5%, we're going to say that they're probably right in the middle and they're going to be talking dovish. So I hope some of that helps. And if you have any more questions, or you have something that you want me to go over, please let me know, because it really helps me to help you understand what we're talking about when we talk finances, and how best to help you buy a home, and how best to start saving for your retirement for later. All right, well, once again, my name is Michelle Williams, and my channel is A Girl, Her Burners, and Real Estate. And it's always a pleasure to bring you a video. And talk to you later, dolls. Bye.